We are live right now.
All right.
So, all my audience, please welcome Isabel. She's our mortgage agent and she's very
Hello.
passionate about this. So, Isabel, welcome to our channel. And we are
Thank you
actually
very
live
much.
right now on Facebook, on YouTube, and on LinkedIn. So, keep an eye for questions coming in on all three social media platforms. So yeah, so before we go into uh, first time home buyers seminar, let's ask Isabel why mortgages and why real estate.
Good question. Two questions actually. So why real estate? I'll answer that one first because that's always been in my heart for the longest time. Um, I think my the reason that I didn't really get into it much sooner was because I didn't really have the right people around me that were in real estate as well that would push you. Rather, I had very few people that were saying, don't go into it, it's dog eat dog. So it was a lot more like, fear based. And, I totally understand they're coming from a place where they just want to protect me and, they care about me. Um, but yeah, even in that situation, I didn't let go of that real estate dream. It's always just been there. I always talked about it. If you ever meet me and if you ever meet my boyfriend too, he'll tell you that like that's a lot of the things I talk about is like how do we get to real estate? Let's do this. So it's just a lot of just talking about it and not much action at the time. And then 2019, just before then, for 2.5 years, my boyfriend was actually in school, so we were up in Barrie. And even there, we're like, oh my gosh, it's cheap. So we moved there 2016, and I was like, oh my god, real estate is so cheap. And then 2.5 months later, everything just like skyrocketed. This
Yep.
is 2016, 2017. I mean, I'm pretty sure you probably know of this, where prices were so low in Barrie, and then it just went up all of a sudden. And I was like, what the heck? We just moved here. we were gonna, we
Yeah,
were planning on
it's the best
buying.
best thing that you guys did, right?
Yeah, it was crazy. Um, but yeah, we kept going. He went to school, he finished it, and then 2019 was the year we decided to move back. Now that he was done school, he had found a career in the field that he studied in, which was amazing. We
Mhm,
decided to stay with his family for a little bit to save. And then
mhm.
that's when I started, okay, we're not paying as many bills as we were now. So I started exploring real estate investing more. And 2019 and 2020 was really the year that I tried to immerse myself in the community. I tried to find, people. There were a lot more on social media too that were talking about real estate investing. And that's really how I got into the community that you and I met at,
Yeah.
was just talking to people. So, yeah, last year was a lot of networking, a lot of meeting people, going on, phone calls because we couldn't meet anybody in person. Just really trying to get myself out there, get myself acquainted with the right, um, you know, people in the industry. And
Yeah.
then my boyfriend asked me, why don't you think about mortgages? Like, I don't know how that conversation came up. I just remember that it was in a car. We were driving and he asked me, why don't you try mortgages? And I was like, oh, well, I'm not that good at math or whatever. Like, I'm not a math guru because I always thought that you had to be a math guru. But
Right.
you don't. So I looked it up and then I was like, oh my God, I can do this in a week. So I enrolled for it. And I was going to take the weekend classes because I was working at the time. I had a Monday to Friday job and it was very demanding. And then the funny thing happened. Obviously, COVID was happening. I was laid off in 2020. And I don't think I've ever really said this in public, but I will say it today because I'm proud of where I am right now. But I was laid off the weekend that I enrolled in the course. The week after was when I got the news. And I was like, all right, I'm switching my course to the 1 week instead of the month. And then I
Right.
got in.
You know what? It's
Yeah.
funny that you say that because the thing is, sometimes that is a sign from God, right? The higher power, right?
Yeah.
Saying that, hey, you were meant to do this, right? And sometimes that's the last straw on the camel's back, saying that, hey, you know what? Now this is it. This is what I need to do, right?
Yeah, exactly. And it was actually great because I it's one of those situations in your life where your back is to the wall, and it's either you keep going with what you've been doing for the last years, or just go for what you want because it's still there. That um voice inside you is still there. That passion for real estate is still there. And
Yeah.
then at the same time, I thought about it and I was like, I know so many investors, they're always talking about financing, private lending and how they're doing all these deals. And I was like, maybe this is a way for me to help, you know, are my new friends, right? My new
Yeah.
community that I'm connected
Yeah.
with. And so it just all fit in. And then ever since then, I have had no regrets. Obviously, there's a lot of like ups and downs and the fear that like, oh my God, did I make the right decision? Should I have gotten a job and done, you know? Um,
Right.
but at the end of the day, I'm happy with what I'm doing, and that's what's keeping me going, and the people
Yeah.
that I get
No,
to
that's
meet.
the bottom line. Thank
Yeah.
you for sharing that story with us, because we want to know the why, right? Like why somebody is a mortgage broker, right? Like
Yeah.
what made them do it. So coming back to our main focus today is our
Hmm.
first time home buyers, right?
Yes.
So let's focus on this, and let's try to help out our audience who are renters and who have been thinking about buying their first home.
Hmm.
And one of the challenges that any renter is encountering is the down payment, right?
Yes.
So Isabel, what tips you can give to our audience about how to save money for your down payment? Are there some tips and tricks that you have to share?
Absolutely. So first off, I'm not a financial advisor, so I just want to make sure that I say that, because obviously that question too very much applies to a financial advisor. But in what I've seen and in my experience, one of the ways that you can really save for a down payment is look at how you can. Um, First of all, look at your budget, right? If you have a job, that's something that a lot of people are struggling with right now. Um, Look at your budget, see where you can make cuts, right? What are the things that you can maybe sacrifice for just a little bit so that you can put that aside, um, and grow that, down payment. And with regards to putting it aside, think about as well where you can put it aside. Investments, right? I would very much advise you to talk to a financial advisor. I'm sure you and I, we know some people in that industry that we can recommend, but talk to somebody that will know how to help you grow your investment or your savings basically, right? Because
Right.
putting it aside in a high interest savings account doesn't really do much for you um, in a short term. You might need to strategize to grow that much faster, depending on what your goal is and depending on when you want to buy, right? So I would probably say, talk to a financial advisor about growing your investments, right? Put it aside. Another way to help with the down payment, not so much saving, is maybe talk to your family. There's a lot of, us millennials. Um, let's be real. It's very hard. I have clients that I've been working with even since last year that are still saving up, right? And I'm continuously in touch with them because I want to make sure that they don't let go of that dream, that they don't get discouraged because it's very easy, especially when you're actually looking for homes and you keep getting no's and no's and no's because of all this bidding war. It's very easy to get discouraged. So um, you know, with us first time home buyers, with us millennials, a lot of the time, a gifted down payment really helps. And it's not just about going to your mom and dad and saying, hey, mom, can I have a down payment? Maybe a good way to get that conversation started is, talk with someone like me about it with your mom and dad present. Let's strategize on how they can help you and how it benefits them in the long run as well, right?
Mhm.
Because I mean,
So
you know,
they can basically take the gift, right? So take the money as a gift. So that's one
mhm.
option. Second option is that they can save in RRSPs, right?
Yes.
So
RSPs,
save in
yep.
RRSPs, right?
Mm-hmm.
So folks who are listening and watching, right? So reach out to us, find out how parental gifts can be used towards your down payment,
Yes.
how you can save your money in your RRSPs, right? And Yzabelle, they need to show it for a certain amount of time, right? What is that?
Yes.
How many months is that?
Yes. So lenders will need 90-day history of your down payment. Now, here's something that I'd like to share with you guys as well, because I've been coming across this a lot. Is within that 90-day period, something to keep in mind is when you're sharing your bank statements with us, if there are any transfers in or out from that bank statement, we are going to need to know where that came from and how and the source. So if you've come across a situation where your agent or broker is asking for, oh, where did this $3,000 transfer come from? It's because the lenders need to make sure that, if you are borrowing, or let's say if you're not borrowing gifted funds and they see a transfer, that transfer is not a gifted amount towards the down payment, right? So
Right.
something to be cautious about as well is that 90-day period. They need to see that down payment um, in your bank account for 90 days. But just keep in mind as
That's
well,
the
any
minimum,
activity
right?
you have.
That's,
Yes,
that's the
90-day
minimum. But the
minimum.
longer you
Yeah.
have, is better, right?
Yes.
So, so as I always tell people, right?
Yeah.
Don't look at the minimum qualification. Try to
Yes.
try to have it more than the minimum. Okay. So
Yes,
so at least
exactly.
for 4 months, 5 months or so, right? Just don't try to have it exactly 90 days, right? Because
Yeah.
some
Yeah.
lenders check for, oh, what about the last month, or
Yeah.
what about the 121st day,
Yeah,
right? It was
exactly.
empty. The bank account was empty.
Yeah, they
Right.
will question that.
So,
But at the same time, right? Closing dates, right? So
yeah.
if your closing date is 2 months out, be prepared for the lenders to ask for the most recent bank statements as well. So yeah, at the application, they're gonna want to see 90 days from your application date. But if your closing is 2 months from now, they're gonna want to see that next 2 months that it's still there. So
Right.
just
Right.
something to keep in mind, right? Just
Yeah.
keep it clean, right, for just before closing when you're trying to prove down
Mhm. Another thing that I want to ask you is that
payment. Mm-hmm.
some folks, some of my clients, or or uh, they have a tendency to, just go and buy a swanky new car before they get their home.
That's my favorite.
Uh, what do you have to say about that?
Not good. If you're closing on a
Tell us,
house,
explain what happens
oh
to
my gosh.
the ratios when somebody goes and leases or finances a brand new car before they go
Oh
and buy a
man.
house.
Okay, so as mortgage agents or as your mortgage partner, okay, we do our best to find you the best pre-approval amount or your actual pre-approval amount. Now, we also talk about budgets, right, along the way. Now, when you found a house, you put an offer in, we've got the mortgage financing set up, and then all of a sudden you decided to buy a car, that is an additional debt that the lenders will see and will need to put in as part of the calculation. What happens then is your ratios will go out of whack. It'll go way above the standards when we've already set you up for, basically at the cusp of it. And what could happen is you could lose the house and in turn lose the deposit that you've worked so hard on, and all because you purchased a new car, right? I'm not saying that purchasing a car is bad, just don't do it before closing, please.
Yeah. So that's also something that I wanted to share with the audience, is that
Hmm.
before you take any loans, any credit lines,
Yeah.
any car loans or leases,
Yes.
try to talk to your mortgage broker about how it impacts your position, right?
Yeah.
So it's
Exactly.
very important that you do that. Okay. And
Yep.
what else? So we spoke about the down payment, how many months
Hmm.
it needs to be there. You can get a gift. Um,
Hmm.
let's talk about credit history.
Credit,
Uh,
yes.
yeah, so let's talk about credit. What are some of the things that the lenders are looking for when they look for credit history, credit score?
Yes. So of course, lenders want to see that you're making your payments on time. Okay. They also want to see that you're not using your credit limit to the max. Typically, what they want is what they would like to see is nothing above 30% usage. Some people say 50. Like, it's sure. There's no actual rule where if the lender see you're using it above 50% that you're denied, okay, or you declined, sorry. But general rule of thumb that we always recommend, don't use more than 30% of your credit limit, right? Keep it 30 or below. Um, but if you have plans of paying it off, let us know as well. At the end of the day, it's all about communication. Some people use the use their credit the entire month and then pay it off like the week before it's due. That's fine, right? As long as we know that, then we know how to structure the actual file properly. Okay. So with regards to credit, definitely, making sure your payments are on time, making sure your usage is nothing above, let's just say 50%, 30 to 50%. And when it comes to, because we're talking about first time home buyers, most of our first time home buyers are young. I've had some that are 19, 20 years old. So I just want to say it out there. Lenders typically want to see at least two trade lines, meaning two credit cards or a credit card and a line of credit. A credit card, maybe a car payment that you've had for a few years now. So at least two, because what that tells them is you're able to manage debt, right? I know that there's a saying that there are a lot of people out there that say having debt is bad, but not necessarily, right? Sometimes when you have no credit at all, the lenders struggle to determine whether you would be a good person to lend to, a good buyer to
Mhm.
lend to, because they don't know how you're going to manage your debts. But if they can see that you're making payments on time, your usage is below, then to them that's like, okay, this person is responsible. They can manage their credit, they can manage their debts, and we're a little bit more comfortable lending, a mortgage to this person. We know at least there's a baseline for them.
Mhm.
Now, with regards to the other side of credit is consumer proposals and bankruptcies. We know with things going up lately, it's been crazy, and a lot. I have had a few clients that have had bankruptcies and consumer proposals on their credit. It's not the end of the world. I just want to say that, right? It's not the end of the world. It's now about communicating with us what the situation is like and having us guide you as to what you need to make sure you're doing from this point on until you buy a house, right?
Got
So, yeah, I don't know if you wanted to go into a little more detail with that, but just making sure you communicate that with us and listening to us as well as your partner is going to be a huge help when it comes to looking at your credit.
Okay, so that's good. So we discussed credit, we discussed down payment,
Mm-hmm.
right? And next thing is jobs, right? So what kind of employment history you should be looking for, right?
Mm-hmm.
And what about people who are self-employed, right? So can we just touch about that? So give us what the lenders are looking for when they're looking at employment history and also how they look at self-employed people.
Sure.
So let's look at that, discuss that.
Yeah, absolutely. So with regards to income, obviously there are some people that are in salary, there's some people that work hourly. So with regards to salary, actually let me back up a little bit. When it comes to employment history, when you apply, we need at least 3 years of history. Okay, so when you apply, if you only give us two, we're gonna come back to you and ask what were you doing a year before, right? That's what lenders want to see. So just something to keep in mind. Make sure you have your 3 year employment history ready, and then next is your income, or yeah, your income type. There's salary, hourly, salary plus commission, maybe salary plus bonuses, all kinds, right? When you're
Mhm.
salary, it's usually a little bit easier because we know exactly what you'll be making every year, and it's
Mhm.
not like you're not working on an hourly basis, right? You get paid for 80 hours, um, and that's what it is, right? You get a set paycheck.
Yeah.
So with that, we typically need
So
to be very
one
quick.
second, Izzy, I'm just gonna
Yeah,
interrupt you for a bit because
yeah.
we have a question from Stephen.
Sure.
Stephen, hi, thanks for joining us.
Hi,
So
Steven.
Stephen has a question. He says, "What about OSAP? Can OSAP? What if I just started paying the monthly payments on OSAP? How does that affect Stephen's ability to buy, or how does the lenders look at that?"
So overall, I mean, there's no really bad debt, right? If you have OSAP, you have OSAP. What's going to happen is we're going to need to know what the balance is. We're going to need to know what your monthly payment is. And then from there, we're going to see how the rest of your file looks, right? Because it's not about, oh, do you have OSAP? If you say no, then you're approved. Or if you have OSAP, if you say yes, then you're declined. It's not at all like that. It's about how all the numbers calculate to the ratios, because we have standard ratios that we have to follow. So it's going to
Mhm.
depend on your income. It's going to depend on how much that you're carrying in relation to your income, and how
Mhm.
much down payment you have. That's with regards to the numbers, right?
Can let's say, for example, can Steven stop the OSAP payments for a bit so that his numbers become better, and then
Well, if
once he gets the loan,
mhm.
then start paying the OSAP, or what's the way around it? Like, because any payments, like you said, whether it's a car or any other payments, is going to hamper his ability to purchase
Mhm.
a home of his choice, right? Like,
Yeah.
so what are some of the ways around? Can we suspend the payments on OSAP?
So even if you suspend the payments, unfortunately, the debt is already there. So when we pull your credit, Steven, OSAP is going to show on your bureau, and we have to legally put that into your application. Now,
Okay.
if you weren't paying and it's suspended, what lenders typically do is they use a percentage. I believe it's 3% for a payment. It may not be exactly what you're paying, but they're going to use that to as part of the calculation. They can't really use zero, as far as I know, because to them it's still a debt that you have to pay at some point, right? It's not zero. So they can't really put zero for a debt that you're going to be carrying. They just don't know when the payment's going to come up, right?
Mhm.
So, unless you can pay it off somehow and not have it show in your bureau, then that might help, right? Maybe a family member will help you, and then that's something that's obviously outside of the application in my eyes, right?
Got it,
Um,
got it.
yeah, yeah. So I wouldn't
Now
worry too much.
here's a trick question I'm going to use. Can he
Oh,
actually use OSAP funds to buy his new home?
sorry. Can you?
Can he actually use OSAP as credit line for the down payment?
Ooh, I have not come across that, to be honest with you. I have not come. I mean, I have OSAP myself, and to be honest with you, I've never really been questioned as to where I would use it.
Where the
You know
money
what I
went,
mean?
right?
It's like, yeah, because some people get OSAP and then they change their minds, right? And they still have the funds. I I think sometimes OSAP may ask for it back, right? But regardless, it's going to be a debt. It's something that you've acquired already. So,
Mhm, mhm.
I'm going to tread lightly on that one. I don't want to say anything and get in trouble.
That's totally
Let
fine.
me get back to you on that one.
Stephen, that's what we call as creative financing.
Yes. Talk to me.
Uh,
Call
so
me.
he, Stephen's got a question. He
Yeah.
says 42K, he makes 42K a year. His credit is 725,
Okay.
40K down payment. He's got 40K down payment, okay? 5% down payment
Okay.
on a 600K property. No debt.
Mm-hmm.
How do you assess this as I am
Hmm.
agent, as an agent? Yeah.
As an
So
agent? Okay.
yeah, in the sense, can he qualify for 600K property?
Um, we will definitely have to check because the income. Hmm. So I
So
like
what?
to work with active numbers, right?
Yeah,
I'm not a big fan of calculators because I find that it's disproportionate to what I typically come up with.
yeah. So
What
you know
I
what, Isabel, what we could do is
Yeah.
you can connect with Stephen Covey, right?
Yeah. Yeah.
Stephen, connect with Isabel because I know this is more granular, right? He's
Mm-hmm.
got
Mm-hmm.
20K ASAP loan, 3 years history.
Yeah.
So let's do that, Stephen. Let's connect with Isabel for she'll have a individual one-on-one conversation with you,
Yeah.
depending on your availability, and then
Yeah.
she could run some numbers because it's just not one lender she's working with. She's working with multiple lenders, and multiple
Yes.
lenders have different criteria, right? So she
Mm-hmm.
can then um, make a case and then tell you individually what you are eligible for. Okay.
Yeah. Also, there is I understand you have no debt right now, but no debt could mean you haven't had credit, or it could mean you have no debt right now, but I don't know what your history was like. So I need to know those things before I can even give you a solid answer, because there's a lot more to it than just knowing what your income is, and how much down payment and the score as well. It's very, what we get is a little different, right? The calculation that we get with from Equifax is very different. It's usually not too far from what you see, but there's just a lot more to the conversation, so then I can actually give you a more accurate pre-approval amount, right? I can
Mhm.
actually give you a yes, you can buy a $600,000 house, or no, you can only afford this much, right?
Right.
Yeah, so
So, Stephen,
definitely connect with me. Yeah.
does that answer the question?
Is he hold on, I don't have my
Yeah,
picture.
he was just messaging us on YouTube. Yeah,
Is it, oh, YouTube, okay, perfect.
on YouTube. No worries. We will. Yeah. So, Stephen, let's connect with Izzy. You can
Mm-hmm.
also call me as well. We can connect. We can have a conference call and see what you're looking for, which city you're looking for, etc. Right?
Yeah. Yeah, exactly. Yeah. And don't
All
worry,
right.
there's no like commitment or anything. I find people, I just want to say this. When we tell you to connect with us, it's to have a conversation with us. It's to get to know you and for you to get to know us, so that we can see a little bit more of the story, and um, you know, see if there's another path, right? See what other possibilities you have. It's not just about, getting your number and having a chat. It's not about that. It's us really wanting to get on a personal level with you, because our interactions with our clients are different, right? It's not a one size fits all. Every client is different, and we cater to our clients very differently based on what their needs are. Okay?
Absolutely. Absolutely. So, thank you for your comments, Stephen. We
Yes, thank
will
you,
we will
Stephen.
connect with you. Okay.
Yes.
Next question on our agenda is mortgage mortgage insurance.
Yes.
Yeah.
Mortgage insurance. Yes. So very
So,
quickly with
yeah.
mortgage. Yeah, go ahead.
Yeah. So yeah, just tell
Oh,
us about mortgage insurance. What are the things that you need to consider, and why somebody needs to buy mortgage insurance, and what are some alternatives if there are any?
yes.
Okay.
So mortgage insurance, really, it's a default if you are putting less than 20% down on a mortgage. Okay? The way I explain it to my clients is it's it's security for the lender, but also for you, that should you not be able to afford your mortgage payments at some point in time, that they won't have to come after you. They have the insurance to cover for that. And you can just walk away. Really. That's what
So
it is.
this is generally for people who are not going the conventional route, right?
Yes. Yes, for
Um,
high insured, yes. High ratio mortgages.
right. So we've got another comment here. What about 60K salary, under 600 points credit, no savings or money down for down payment? Currently renting apartment, starting to pay OSAP just recently. Will it get approved by the bank?
Hmm. So
So
the one thing that worries me about that is you have no savings or money for down payment. Unfortunately, we need a minimum of 5%.
five
So in
percent.
any case, any purchases up to from 0 to $500,000, the minimum down payment is 5%. Now,
Okay.
as a first-time home buyer, you said you've been renting, so I'm assuming you're a first-time home buyer. Um, Maybe there's a way you can have a conversation with your parents and have them help you out, or an immediate family that can maybe help you out in the short term to get you into the housing market. Same thing for you, Joyda. It's have a conversation with me. I believe you've already reached out and we started a quick chat. But let's definitely dive deeper into your file, into what it looks like, and see what areas we need to work on. And just because you may not be able to buy now, I'm not saying you can't, but in case you can't, doesn't mean that our conversation ends, right? We will continue working together to see where we can, prepare you for home buying.
Yeah, because the
Yeah.
salary looks good, and
Yeah,
credit
the
is
salary's good.
just on the borderline, right?
Yeah.
So the only thing we should work on is probably the savings towards the down payment, right?
Yeah.
And
Yeah. And a little bit of the credit too.
right,
So if
work on the
that's
credit.
something,
So
yeah, working
on
on your
that
credit a
point,
little bit too. Yeah, so it does one borrower does need to be around 680 minimum. And then if the other borrower is a little bit below, that's okay. But typically what lenders and banks will look for is a minimum credit score of 680
16.
to qualify. Yes. So two things that we need to work on is just the credit, and I can definitely help you with that and how you can boost that up in a few months time. You can boost it up in 3 months time, really, and you'll see the difference, and as well as the down payment. So just those two things I think need to work on. Salary's good. It's fine that you're currently renting. I mean, you have to be living somehow,
Somewhere, yeah.
somewhere. And OSAP, that's fine. It's
Yeah.
normal.
So that's a very good question,
Hmm.
and Isabel can work with you and improve your credit score. Some of the tips that you can share with our audience, Isabel, of how you can improve your credit score.
Yes. So, one way that I tell my clients to improve the credit score all the time is, with your credit card, use it, but pay it off every month. If you have a small balance right now on it, pay it off, and then buy something that's like $20, $50 a month, and make sure it's paid off at the end of the month. Just make sure it's down to zero for at least a few months, and you'll see that your score is going to start to boost. Another way too is if you do have an offer from that bank specifically to increase your limit, take it. Just don't use it. Just don't overuse it. Okay, but take it because what happens is when you have a low usage but a high credit limit, that's actually a good thing. It really does boost your credit score. So those are definitely two things that I always recommend. Um,
Excellent.
and yeah, and just use it responsibly. That's it.
Excellent. Joyda, hopefully we answered your questions. Again, for
Oh,
more in-depth,
yeah,
in-depth analysis and guidance, I would definitely
yeah,
consult with Isabel, have a one-on-one conversation with her, and we can guide you to your first home, definitely.
yeah,
Hope that
for sure.
answers your question. Okay.
Mm-hmm.
Moving on, closing costs, right? So this is
Yes.
something that some people are unaware of. Get caught, get caught
Mm-hmm.
surprised, right? At the end of the lawyer says, by the way, bring in an extra 10K, 12K, right?
Yeah.
Um, what? Why has never told me this? Isabel never
Yeah.
told me this, right? So,
Yeah.
so hopefully it's not us who are not telling you. We want to inform all our clients, right, about what closing costs occur. So can you just give a brief about closing costs? Yeah.
Yes. So I actually always tell my clients ways, so definitely nothing to worry about with me. I always tell my clients above the down payment. So like you have, let's say the 40K down payment because that's what I've
Yeah,
seen here.
5%
Let's say
plus.
40. Yeah.
Yeah.
Yeah. So let's say you got minimum down payment. Um, what the banks will also want to see from your bank statements is that you have um, enough for the closing costs. So we typically say a rule of thumb is 1.5% of the purchase price. Okay. Some may ask for two, but what I've seen so far is at least 1.5% of the closing cost should be seen in your bank statement. You cannot just give us a 90-day bank statement that says that you only have 40K.
Yeah.
Okay, that will definitely get declined. You're gonna have to find a way to see, where can you find that extra, because it's accounting for lawyers, it's accounting for any appraisal costs, land transfer tax. Those are things you got to pay for to when you close the property. So the banks will need to see that you can afford that as well. That this is why when you fill out an application, um, with most agents, they have a section for assets. The banks
Mhm.
want to see that you're not using all of your money just for the down payment and not have enough for closing costs and even for emergencies, right? Not that they're really going to like ask about it, but
Mhm.
at minimum, they're going to want to see your down payment and your closing costs, and we say 1.5% purchase price of the purchase price.
Right.
Yeah.
Excellent.
Okay.
Usually, okay, let me just
How about you, Wise? Have you
one second. Hold
encountered
on.
any other ones?
One second. Control.
Mm.
Copy. I'm actually trying to share a very nifty thing that I have on my website. It's the mortgage calculator. So that will
Yes.
also help you calculate um, your closing costs, right? So,
Mm-hmm.
guys, if you want to go on to yzabelle.ca, you can have the mortgage calculator, and then it'll tell you the breakdown of all the closing costs that you need. Play around with it, and of course, reach out to Isabel for more accurate numbers. Right.
Yes, exactly. Realistically, for closing costs, just at least have 1.5 to 2% of the purchase price, and you should be good to go. And then worry about that down payment. Just make sure you have that, right? And that you're not using all of your money for the down payment, because you are going to need others. Like you are going to need that extra to close the house. Otherwise, you're going to lose it
Yeah.
somehow.
Yeah. Yeah, no, it's very important that you are taking care of the closing costs, right?
Yeah.
Hopefully that helps answer some of the questions. Let's
Mm-hmm.
move on. First-time homebuyer incentives.
Yes.
What are some of the first-time homebuyer incentives that are currently being offered?
Yeah, so right now we all know about the first time home buyer incentive itself. It is where the government will match your down payment. So if you put 5%, the government will put 5% as well. And what the incentive does is it also helps for you to be able to purchase the home, but also to have a lower mortgage payment than if you were to be just putting 5% down alone, right? You have a lower mortgage payment with this incentive because they have matched your down payment, right? That's how it really works. Um, and
Is
that
that
is just
is that still available? They had it for a short time. Is that
no,
still
it's
available?
yeah, it's still available for sure. What happened was the criteria has actually changed a little bit. So
Hmm.
here's the thing with the first time home buyer incentives, and this is something I've come across a lot as well with clients.
Hmm.
Is fortunately, a lot of my clients do have really good income combined, right? Husband and wife or girlfriend, boyfriend buying together, their income is really good. What many people don't realize is there's a criteria for the incentive, and
Hmm.
one of them is an income. So you cannot exceed last year 120,000 income combined.
Hmm.
And
Hmm.
so if you are making 130,000 altogether, this even though you're a first time home buyer, you can't qualify for the incentive, right?
Got
Because
it.
there
Got it.
are criteria to the incentive. Now though, what they did, I believe it was as of April of this year, is in Toronto, they have actually increased that maximum income to 150,000.
Oh, okay. Yeah, that
Yeah,
makes sense. Yeah. It's
yeah.
very hard to,
Yeah, I mean, a lot of jobs now are paying 60K, right? Like 60, and that's for maybe a mid-level to almost senior level position. I mean, that's just coming from my experience of where I was
yeah.
at and making above 60K. Um,
Hmm.
so it actually makes sense that they increased it, really, because a lot of people couldn't qualify last year because they were making really good income relative to the incentive. So that's one
Right.
of the eligibilities. Now, you also cannot be borrowing more than 4 times your qualifying income. So that's where things start to fall apart. That's where I saw things start to fall apart as well. Is I've had clients qualify for 800,000 with their income, and they're right at the 120, right? So they can
Mm-hmm.
technically qualify for the incentive, but
Yeah.
they cannot buy more than 4 times their total income, even
Right.
though they
Right.
can qualify for higher. So if that's the case, then unfortunately you can't qualify for the incentive. But if you were to buy below that, then we can get you into that program.
Mm-hmm.
Um, the other criteria for that too is there's three more is that you or your partner have to be a first-time home buyer, which means one of you cannot have owned a home. Um,
Mm-hmm.
and it goes into the fourth one too is that you cannot have owned a home for within that 4-year period. So to qualify again as a first-time home buyer, you have to have that 4-year period where your name is not on a house whatsoever.
Mm-hmm. Mm-hmm.
Okay. And then, of course, minimum down payment. So you need to have at least 5% for a down payment to qualify for the incentive. So all of this is really it's online, right? But
Yeah.
honestly, when I started in the industry and I looked it up, I was confused. So I'm not surprised when people come to me and they're like, I don't understand it. So definitely, reach out if you want to clarify some of those things because I can explain it to you, since I've seen it with a lot of my clients, whether they were eligible or not eligible.
Perfect. Perfect. Awesome. Um, you had mentioned some other lender programs that you would like to discuss.
Yeah, I just want to share, being a buyer, there's a lot of information out there. And, I want to be one of those agents where people can come to and know that I'm not just going to offer them one type of product. There is so much out there that you can take advantage of, um, regardless of whether you're a first time home buyer or a second time home buyer or an investor. Okay, there are programs with monoline lenders, they have cashback programs, which means you get a mortgage with them just like any other mortgage, but there's a program where they can give you 1, 2, or 3% cash back, 3% of the mortgage or 2% of the mortgage. And the way that I see this really benefit my clients is when you're first time and you don't have much, you're already putting your life savings as a down payment, you need something to start with, right? I find that this cashback program can help you just get your life started in that home. It can help you buy your furniture. It can help
Mm-hmm.
put some funds into your emergency after using it for the down payment, just to give you that cushion when you're a new homeowner. The
Right.
cashback program just helps with that, I find, and it there's only a little bit of a difference with the rate, but I find that in the long run, depending on your situation, it's really beneficial to a lot of people. Now the
That's
other,
actually good to know because
yeah,
remember how we said that we can use a gift from somebody, your parents for your gift.
yes,
Maybe you could return some of the money back.
exactly. That's exactly it. You can return
Yeah.
it. You can use to buy furniture with it. It's just
Yeah.
like it just helps with a lot of things to just give you that little breathing room when you
Yeah.
finally, get the
You
keys to
said
your
two
home.
to three percent. That's a lot.
Yeah,
Three
1 to 3
percent.
percent. Yeah, 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 yeah,
1 to 3%. Right.
yeah. That's
If
for
I
high.
have two
That's for
percent,
high ratio. Sorry.
yeah. If I have 2%, right? I borrow 3% from my parents. I got five
Mm-hmm.
percent down now. Somehow managed to save another 1.5% for those closing costs.
Yeah,
Right. There you go. You
it
just
pretty
need
much comes back to you.
two, yeah, 3.5%. If you have 3.5%, and you can borrow 3% from your mom and dad, she can get you cash back 3%.
Yeah, exactly. And that's just for high ratio as well. If
Mhm.
you're buying with in a conventional mortgage, if you're buying that, I think you can actually get up to 5%. But with
Okay.
high ratio, you can only get up to 3. And I did it with a recent um, client of mine, and
Mhm.
they've had all their money. They make really good income, but this
Yeah.
cashback really helped them to just give that breathing room because they were the kind of clients that they want to have emergency funds.
Yeah.
And the
Right.
fact that they had to use it towards the down payment just for
Yeah.
this to get into the market was
Yeah.
a little stressing them out a little bit. So when they heard about this, they're like, let's take it. because now it's given them a little bit of breathing room. So it's
Excellent.
yeah, it's been great. Yeah. So
Excellent.
that's one program. The other one as well is the purchase plus improvements. So something that
Mhm,
first time home buyers can also take advantage of are for our purchase plus improvements. So a lot of us, we go out there and be like, we need a turnkey, turnkey home, right? And that's
mhm,
great, right? If it's your preference, totally
mhm,
go for it. But there is
mhm,
an option where you can maybe buy a little bit of an older home, and if you're okay with doing some little renos in the house, there's actually a program that can help you with the renovations. Doesn't have to be big. It can just be
mhm,
like, little fixes here and there in
mhm,
the home. This program can actually help you with that. So you don't always have to look for the, you know, turnkey home.
yeah,
If this is something in your radar, if you're good with your hands and you're willing to do some, to get a little bit dirty,
yeah, yeah, yeah.
there is a program for that. Yeah.
Mhm, mhm.
Yes.
So, power team. You're talking about power
Mm,
team. How important it is to have a power team.
yeah. So power team, the reason I have that, I mentioned that to you, was something that I wanted to talk about is I just saw how important it is for clients when they feel and they can see that their realtor and their mortgage agent and maybe their home inspector are actually working together for them.
Yeah.
I think it gives them that sense, a different sense of confidence when they're actually out there trying to find their family home. They know that these are people they can trust, right? They're not having a different conversation with you and then a different conversation with me. They're not trying to translate everything. Instead, we are actually working together with them and for them, um, at the same time, right? I give them an update on their mortgage. I also give you an update as the realtor as to what's going on. Hey, I just had a conversation with, let's say Steven, and this is what we talked about. I just wanted you to know what's from my end and what's coming from them, right? So it's just
Right.
nice to be on the same page. Yeah.
Yeah. No, definitely agree. That's where, I want to talk about that your first home may actually not be your dream home. Okay. So
Yes.
I always tell my clients is that, you know what, it's don't think about your dream home. Think about what you can get now, what you can get
Hmm.
qualified for now. Because I usually explain to them that this is they call it as a property ladder.
Yes.
Property ladder, right? That means you need to take the first step before you go to your mansion,
Hmm.
correct? So look at what you can get right now, what you qualified for right now. Talk to yourself and myself and see which city you want to live in, right?
Hmm.
Which city you want to live in, what kind of lifestyle you want to have, right? Because there are different products, right? There's condos, there's townhome complexes, semis, detached, etc., right?
Yes.
So
Yeah.
that's what I always tell is that as a power team member, as your realtor, I am going to tell you that uh, that you should buy real estate, buy now, but buy what you can afford right now, right?
Yeah.
We don't want to have a situation where you buy something that you stretch yourself to buy it, and
Yeah.
then
Yep.
your lifestyle gets affected, right?
Yes.
So you have to have a balance on that, right?
Yeah,
So
that is actually something. I'm glad you mentioned that because that is part of my conversation with my clients is budgeting. A lot of people
yeah,
come to me and say, "What's my maximum pre-approval? What's my maximum pre-approval?" And listen, some clients have maximum pre-approvals of 900,000 and their mortgage payment is like 4 grand. Okay? The question is, can your budget fit that $4,000? What is your lifestyle like right now? You may be able
yeah,
to afford on paper 900,000, but if you have two luxury cars, if you budget two vacations or three vacations for your family a year, if you have a lot of bills to pay and there's not enough for the mortgage payment, then technically you can't really afford the $900,000 home, right? So it's about communication, right? It's about going into the nitty gritty and planning strategically for you, not for me, not for Wise, but for you, what's best, right? To get your real estate journey started, right?
Mhm.
So it's very, very important. I'm glad you brought that up. So I thought I had to mention that.
Thank you, thank you. And also, I wanted to ask you if
Yeah.
some of my first-time home buyers, they're actually playing smart. Okay, they are saying, "Hey, Wise, you know what? Get me a home that actually has 2 units. Where I
Yes.
can I
Yeah.
can rent out the basement and get the renter to pay half of my mortgage, right? How does that work? What do you need as a lender to qualify that home as an income generating property? Do you need it as a legal status that you can rent the basement, or just an in-law suite is okay? So, what is your experience?
Um, so what I've seen is if the MLS listing actually says it's like a duplex or a triplex, then they may actually consider the rental income. And that's actually good for you as the client because it's going to offset some of the debt. It's actually going to lower your ratios because that
Mhm.
means you're paying less, right? Your mortgage payments up here, but you're not really because half of it is being paid off by the renters. So um, so I think as long as we can communicate that to the lenders, if they actually see that it is a unit like a unit that can be lived in, why not? Right? At
Mhm.
the end of the day, I'm not the lender. I'm the one representing you to the lender. I get to tell your story. I get to make the case for you so then the lenders can see what the possibilities are for you. This is the best part about us is we have really good relationships with our lenders and the banks. I mean, banks are lenders, but I just want to differentiate that as well. And to us, it's not just what's on paper. It's about what the conversation has been like as well.
Mhm.
So definitely, that's one of the benefits of working with us too.
Absolutely. So the next topic I want to discuss is
Hmm.
getting pre-approved, right?
Hmm.
So generally, people call me and say, "Hey, I want to look at houses. When
Yeah.
are you free? I want to look at these houses. Can you make some bookings?" Right?
Yeah.
So before I say before I take you out, I need a pre-approval, right?
Yeah.
So how can you help our audience get pre-approvals, and what is the importance of a pre-approval? And also, can you also help us if you provide the pre-approvals for pre-construction properties, right? So a
Yes.
little bit about pre-approvals.
Yes. So pre-approved. Sorry, if you hear my dog, I just got a new puppy, so she might be whining a little bit. So I do
Uh,
apologize for that in advance. So
there's nothing you
pre-approvals
already.
wise, yeah. So with pre-approvals, the way we get so first off, it starts off with having a conversation with us. Message me on Instagram, Facebook, text me, email me, call me. Let's have a conversation on the phone. It's not going to be a whole interrogation. It's actually going to be what's your story, right? I'm going to want to know what your story is, and then I'm going to tell you my story as well, and I'm going to tell you how we're going to start working together and how I can help you. That's really where it starts, right? Next step would be let's fill out an application. Let me see what the numbers are like. What does the file look like, right? I'm not going to submit it to a lender right away. Rather, I'm going to want to assess your file first. I'm going to ask you about, is there anything on your credit that I should know about? Okay? And let's talk about that. What might the lenders respond to about that, right? If it's a consumer proposal, if it's nothing, then it's nothing, right? But we're going to have a strategy session, is what I call it. So, first the call, then we're going to do the application, and then we're going to have a strategy session because now that I have a, a better picture of what your story is like and what your file looks like, we're going to start going back and forth. Okay, we're going to talk about your goals. Do you plan on investing, right? That's good for you as well. Why is to know, right? It's
Mhm.
what's the future planning for our clients, right? What would be a good property now to buy for future investments, right?
Yeah.
um, so we're also going to talk about what's now. We're also going to talk about your long-term goals because that's also going to help me determine how I can best help you and how me and Wise can work together to best help you, right? From then on, if the file looks good, and usually it does, then we'll submit it to a lender, or multiple lenders rather, and get a pre-approval. See what the response is like, and from then
Mm-hmm.
on, I'm gonna call you and be like, why is this person's good? Let's start helping them. Let's see if we can find them a property in this price range, right? This is what
Mm-hmm.
it's gonna look like with a maintenance fee. This is what it's gonna look like if it's a freehold, right? Those things. We're gonna get into the nitty gritty, so then you can also use your time wisely to find them the right properties.
Yeah, exactly. Exactly.
Yeah.
So yeah, get yourself pre-approved. Reach out to
Hmm.
Yzabelle.
Yeah.
Have a one-on-one session with her. She is,
Hmm.
taking some bookings this week. So that's the reason we are having this, webinar to inform you, to talk to you, to get to know you, so that we can help you guide, with your next purchase, right?
Yeah.
Um,
Exactly.
yeah. So the other question is. Um, banks versus a mortgage agent, right? Like,
Hmm.
what are some benefits that clients have when they talk to you as an independent mortgage broker?
Yes. So for me, when you speak with me, I don't work for a specific product, right? And by product, I mean, Scotiabank, TD, MCAP, Merrick's. I don't work for them solely. I work with them. Okay, there's a very big difference. We have my brokerage. We have great relationships with the lenders in the industry, um, and so in my situation, in my role, I actually work with you and I work for you as the client, right? We look at your situation, and I find I basically am the one shopping you. Let's just use the layman's terms, right? I'm the one who is shopping the mortgage product for you, the one that fits your situation best and the one that fits what you're looking for best. So, I could get your file and be like, oh, you know what? You're going to be a great fit for Scotiabank. Oh, and they have a program just with us that I can put you in. That's also another benefit to working with us is we get promotions from them, right, that we can pass down to our clients. So you compared to walking into a bank, yes, they may have promotions as well, and I'm not saying that those are bad, right? But it's also good to know what else is out there for you, right? For
Mhm.
example, not many lenders have the cashback program. Maybe that's something that might help you, right? So that's something we can talk about. So definitely, working with me is it's transparent, it's open. I'm not going to push you to one type of product. I'm going to show you what your options are, so then you can make an educated decision and a confident decision for your home, because this is a long-term investment. This is not like walking into a store and buying something and then being able to return it within 30 days. This is
Yeah,
long
absolutely.
term, so I'm just as invested in your success, as I am in mine and Wise's in our business.
Yeah, no, totally makes sense because I'm always, advisor of different options, right?
Yes.
Uh, to present to the client what is good for them,
Yeah.
right? And the client has an option to choose. Okay, you know what? I want the cashback program that X
Mm-hmm.
lender has. Okay. Oh, I don't need the cashback. I need a lower rate. Okay, there you go. Right.
Yeah.
So depending on the situation of the client and the client's ask, right?
Mm-hmm.
You as a mortgage broker can line up different products
Yes.
for them based on their eligibility and have the client choose, right?
Yeah.
Whereas if you go to a bank, you have pretty much no choice because the guy across the desk
That's it.
has only one product and he has to sell you that product. And sometimes
Yes.
he or she will not even discuss other options with you. They'll say,
Yeah.
that's what it is, that's it, take it or leave it, right?
Yeah.
Whereas with a broker, you are having multiple choices, right? You can take advantage of different lenders, whether
Mm-hmm.
it's the rates you're looking for, whether it's the terms and conditions, right? Because sometimes it's not only the rate. What if you want to have like multiple properties? What if
Yeah.
you only plan on being in the country for like 2 years, right? You don't want to be hit with a a penalty at the end of 2 years, right?
Yeah.
So
Yeah.
these are some of the terms that I think, as a client, you should talk to Isabel, talk to her, and see what your situation is, what are you looking for, right? And so that she can advise you on which product works for you the best, because you're working with how many lenders? 20 lenders or more?
More. Oh, much more. Like we've
Like
got
50 lenders plus, right?
you know what, 50 is a good number. I mean,
Yeah.
like that's
So
it's
she's
a good
working
number,
with
but there's more.
50 lenders,
Yeah.
right? She's working with 50 lenders. And
Yeah.
when your file goes in, she has a choice to discuss with 50 potential underwriters to see how she can get you the loan and the best terms and the best rate and what options, right?
Yeah. And the thing too, and by the way, we have great relationships with the banks as well, even the ones
Hmm.
that don't go through broker channels. The thing with us is when we have built a relationship with somebody at the bank, we can often also get you that, right? Like we can also
Yeah,
pass that down to you. It
yeah.
because it's very different when you just walk in and nobody knows you and all they want are just X, Y, and Z, and then they tell you what your pre-approval is. It's very different. I'm not saying
Hmm.
what you're doing is bad at all, okay? Because we all work in the same industry, and they do a great job.
Hmm.
But what I find that's been really beneficial to the clients I've worked with is the accuracy as well, right? Like you mentioned, I do have conversations proactively with lenders about my client's file. I don't send it to them because if there's no reason to send it, yeah, why would I, right? I'd
Yeah.
rather have that conversation first and be like, listen, this is my client right now, this is their situation. How do you feel about it? And that way
Hmm.
I can get an actual, tangible information from them and
Hmm.
bring it to my clients and say, okay, we need to work on this because this is what
Yeah.
they're saying. This is not just me assuming, this is what the lenders are actually saying,
Got it.
right?
Yeah.
And it won't hit your credit, right? Like not always. Sometimes if sometimes I have to pull your credit, right? Sometimes I will have to, but I typically leave that to the very end. And a lot of
Mhm.
agents, when they hear this, they might be like, whoa. But
Yeah.
I do it differently, just a little bit differently, because I do
But
want to
they can
protect
pull the
you.
credit themselves, right? Like they can pull the credit themselves and give it to you, right?
So they can, but what we see is very different, right? What we
Mm.
see, there's a lot more detail in the file that we see. And we can sometimes we see things that they don't, that may be a red flag, that may be something that needs to be addressed up front. Because here's the
Mhm.
thing with lenders, right? If we can address the issue that they might see up front, they're a lot more receptive to the story behind it, right? If you
Got it.
had two missed payments last year, and I addressed it up front and said, by the way, you're going to see two missed payments last year. This is the story. It's a lot
Mhm.
better for them. They feel a
Yeah.
little bit better, listening to me on behalf of my clients because
Right.
we're not hiding anything, right? And
Yeah.
nothing's like
Exactly.
popping up like red flags here and there. Yeah.
Exactly. Exactly. Okay. So, did we address the question on the pre-construction pre-approvals as well? Like, what's the max you can do on those?
Um, the pre-construction and maximum in what sense?
Pre-construction pre-approvals. Pre-approvals.
Oh,
Let's say the house is getting built next year, and
right.
they come for a pre-approval. Is there a time that you guys have, or any lenders specific?
Yes.
Yeah.
Yeah, so sometimes depending on the builder, because they often the builder is the one that dictates where they want the pre-approvals to come from, even though you don't have to stick to that.
Mhm.
So sometimes the builders will say, "Oh, we have a partnership with these three banks. We
Yeah.
only accept pre-approvals from these three banks."
Yeah.
Unfortunately, it's something I can't help out with. Now, the,
Mhm.
the good thing with that is you're not stuck with that pre-approval.
Mhm.
The builders just want some sort of security and protection for themselves that, hey, we
Right.
got these clients were pre-approved at the time. But
Got it.
if the property is closing, let's say next year, that pre-approval isn't going to hold. Okay,
Yeah.
they're gonna need to redo another application. We're gonna need to resubmit the file because what they in a year anything can happen. You can lose your job. You could have gotten a
Mhm.
new car, which now removes you from that pre-approval, right?
Mhm.
So within 120 days is typically what we say. 120 days of the closing date. of that pre-construction. Okay, that's when we start doing the pre-approval again, which then will hold until closing date, unless that closing date gets pushed by the builder. But
Okay.
typically, what we say is, come to us 120 days within the set closing date of that pre-construction, and then we should be able to work on that. And that way too, we can secure you a good rate, because rates go up and down all the time, right?
Yeah.
So if we can secure you the better rate now within 120 days, even better for you.
That's awesome.
Yeah.
That's awesome. It has been fantastic. Thank you. We are
Thank
almost
you.
over time, actually.
Oh yes. Oh my gosh. We can go on and on about this all day. This is what
Yeah, we
happens when
can.
you like it so much.
Certainly. Certainly, right? So that shows
Yeah.
the passion about behind it.
Yeah.
So
Mhm.
everybody watching, thank you for watching. Again,
Thank you.
reach out to Yzabelle, okay, on Instagram, Facebook, LinkedIn. Okay, she's there. Reach out to me if you have any real estate questions, and we'll see how we can, work together to get you your first property. Believe me, getting your first property is the most challenging,
Yes.
but it can
Ooh.
happen.
Yes.
Don't get disheartened, because there are different markets, where you can still buy. And with the trend of working from home, uh, maybe you don't have to be in Toronto to buy a home in Toronto. Maybe you can sit down at St. Catharines and
Yeah.
work from home. So reach out to us. We have some creative solutions, whether it's mortgages or real
Yeah.
estate. And thank you for joining, Yzabelle. Thank you
Thank
for
you as
taking the
well.
time for doing this
No
with
worries.
us and audience. Hope to have you again sometime
Yes, I was
soon.
gonna say, let's do another one. We need a part 2. There's too much to talk about.
Okay, on that note, I think the next one we can target is investors.
Sounds good. Let's do that. From first time home buying to investor. Because listen, guys, we can make it happen. It just starts with one. It starts with one.
Exactly.
Yeah.
Isabel, thanks again.
Thank you.
I think your puppy is looking for you,
Oh
right?
no, he's playing. He's playing with his squeaky toy.
Yeah, I can hear that.
Yeah,
Uh,
sorry.
so no worries, no worries. Okay, it's a fun time we had. Thanks again for joining us. Take care. Bye bye.
Thanks, guys. Have a good night.